Hello traders, welcome to your channel, and I hope you have had a wonderful day today. And today we are going to speak about divergence. As I said before, it's my main strategy, it's my only strategy actually. I put other things just aside, divergence to help the divergence itself. So if you have looked at a price chart and wondered why the market's moving one way while your indicators are screaming something else, you're probably dealing with divergence. Today we are diving into the divergence, what it is, how it works, and why it's game changer, and why I chose this strategy as my main way to trade. It's a game changer indeed. So stick around for full breakdown, and don't forget to smash that like button, and please be subscribed because there are way more to come. Okay, let me go to the chart directly and don't waste your time. I have to make this small, put it here so we can go here. As you see in this chart, we have a price action. All these candles are called price action. And let me hide this moving average. We are going into every concept of trading and all the instruments, all the indicators I use. We will talk about all of them, but one battle at a time. So now just we need the price action, and I need an indicator, which I will go through it later. So you just can think of it as a normal RSI. It is not a normal RSI, it's a modified RSI called composite RSI, but just don't worry, any indicator you use can show you the divergence, and most of them are working exactly the same, especially if it is an oscillating indicator, which this is actually. RSI is an oscillating indicator. I will talk about all these things. So for the moment you just need RSI, a simple one or composite one, whatever, or stochastic, whatever you have. You can understand the concept of divergence with that indicator. So all you need is that indicator and your price action. Divergence is when the direction of the price action is the opposite side of the direction of the indicator you're using in the same period of time. So here, if you look at this time, this box that I made here, okay, if you look at this box, the price has a button here and also another one here. This is a low, this is low number one, this is low number two, and you see this low number two is a higher low, so it means it is higher than the previous low. Okay, low number one, low number two, and the same time in the indicator is this. Okay, so in the indicator you have this low number one and low number two, which is exactly per these lows. Okay, this is same as this, and this is same as this, and here we have a lower low this time. So there is a difference in the direction. We have higher low, lower low. Let's say this is a positive trend, this is a negative trend, this is a down trend, this is an uptrend, this is bullish, this is bearish. Okay, so when you spot these differences in the price action and the indicator that you use, we call it divergence. Okay, We have different types of divergence. We will go through them in next videos, but for now you just need to know how to spot a divergence. Just to know the names, we have hidden and regular divergences, we have bullish and bearish divergences, and they're very simple and easy. I will make them simple and easy for you, but for the moment you just need to know a divergence in economy. The definition of divergence in an economy is when the price action and one indicator that you use are not in the same direction. This is called divergence. Okay, so this is a divergence in the lows that you see, and we have this divergence. That was the gold chart, by the way, and we are in Euro USD chart now, both in daily time frame. And if you look at this here, you see this high here and this high here. Let me spot them with this. Okay, so we have a higher high in this chart. The previous one was in the lows, so I chose this one on the high. And if you go to the indicator, same wicks, same tops, same highs, you see these two highs which are not in the same direction. This is higher high, this is lower high. So we have divergence here. And as you see, the price was in an uptrend till here. And after this divergence, price started a downtrend. Also here, we were going upward, and here we had a correction. And after this divergence, the price again continued its upward uptrend and went higher. Okay, so here, after seeing this divergence, you could enter a position, a long position, and well, you have to find the TP and the confirmation, all these things, which I will explain to you later. But with this divergence, you could know that the price is going high again. With this divergence, you should know, and you could know that the price is changing the direction and going the other way. So you could profit from the short position. So this is the definition of divergence, and we have many other things to talk about divergences, but for the moment we stop here, and I want to ask you to go to the chart and try to find as much as divergences you see in any chart with any indicator that you use. But I prefer to ask you for a classic RSI, relative strength index, which you can find all of them here. This is the TradingView platform. So if you come to indicators, you can search for RSI, for example, and you see all these different RSIs, which this one is the most popular one, the classic relative strength index that you can use easily. Would be something like this. This is a modified version of it that I will explain to you later. Okay, I'm going to leave you with your homework. So go to the charts and find and spot and draw as much as you can in divergences, and look at the impact of those divergences in the chart. Thank you for company, and I hope to see you in my next video very soon. Goodbye.